Hi guys, Russ Cowan, Money Smarts Incorporated. We started this video blog to add some value to the services we provide our clients and to their friends. We'd appreciate it if you'd comment on the videos and provide us with video topics you'd like to hear more about. Thank you for watching this video. Please feel free to share it or refer a friend. When you consider write-offs for a tax return, it's important to look at kind of all aspects of the return in the big picture. And so what we do as tax accountants is we might help you come up with write-offs and things that you're missing, but then we might also tell you to slow down on some write-offs that maybe are a little edgy, maybe are a little in the gray area. And the reason we do that is so that you can have a better big picture. So if you go out and try to get bank financing and you never show any income on your business, it's going to be really hard to get financed for a loan. So we have redone returns to help people buy houses. We've helped them get business loans, different things on that order, simply by carefully considering the deductions they're claiming on the returns. A good example of things that I might see is if somebody wants to maybe write off mileage on a spouse's car, maybe that spouse does some running, or they want to write off a whole car for a spouse, or they have a different sales car, or want to have more expenses so they can drag down their business income. And when you don't show income from your business, you can't get financed. It's easiest to, if you're a entity, take a payroll check and show an income. That looks really good to the bank when you take it there. And so if you've drawn your income down to an impossibly low level, and probably the biggest way I see it is when you're trying to buy a house. If you draw your income down to an incredibly small level, you will not qualify for a loan. I think some of the areas where your personal life can be affected long-term is the value of your business. So someday I plan to retire from this business. It's going to be quite a ways down the road, but I want to be able to transition this business to another person. So every year I have my business valued so that I can potentially sell it someday and have some idea what it's worth for my retirement plan. We as business owners put everything we have, blood, sweat, tears, and money, into our businesses. And we really need to look at it that we're building a portfolio or an asset in our portfolio so that we can someday do all those things that we want to do. An important piece of any business is having a relationship with an accountant. So you can talk to them about what things you can write off, maybe some of the most strategic ways to write things off, and some of the things that maybe you shouldn't write off. And when I say relationship, I don't mean go in once a year and have your taxes done. I mean, you meet with that accountant maybe every month, maybe every quarter, and at least tell them what your long-term plans are. You know, it's very easy. You make it very easy on an accountant to say, I don't want to pay any taxes, write all this stuff off. You make it more challenging on an accountant if you say, in 10 years, I want to do this. Tell me how to get there. And that's really where you get your value in using an accounting firm. So there are years where getting a tax refund is going to be a good thing, or maybe maximizing that refund are going to be a good thing. But what I want to emphasize with every business owner is we plan for it. You know, so maybe this year we did buy a big piece of equipment or a new truck or something very large for our business, and we could write it all off and not pay any taxes. That sometimes works out to be a very good scenario for people. It can give us more time to plan for our next step. It can give us time to plan for financing in the future, but I really want a business owner to take a step back with me and think about what does the big picture look like. And so when I meet with a tax or a business owner for a tax return, I will typically say, well, you have options. We can do this with this big piece of equipment or that. We can write the whole thing off, or we can stretch it out over its normal depreciation schedule. And here's what those options look like. Here's maybe what I recommend, but we can do it either way. And so I'll work with my clients to hopefully help them at least understand the decisions they're making. If you're not sure whether or not to take that big write-off, give us a call and we'll help you through that question. Next time we might talk to you about why sometimes it's good to pay some taxes. We'd appreciate it if you'd share this video and send us a referral, and if you do, we'll send you a gift card. Please feel free to give us a Google review, and we appreciate it. Thank you for watching this video.